Okay, so we can start our meeting of today. I didn't receive any objection to the adoption of the agenda, so I considered it adopted. So I welcome the ECB President, Christine Lagarde, to this second monetary dialogue of 2020. Since the last time she attended the ECON committee, the scenario has dramatically changed at the global level. At the time, it was February the 6th, the economic forecast still projected a moderate growth for the euro area. And only a few weeks later, an exogenous shock of tremendous proportions sharply pushed the world towards the most severe economic crisis since World War II. The Eurosystem staff macroeconomic projections published on the 4th of June show that in the baseline scenario, annual real GDP for the euro area should fall by 8.7% in 2020 before rebounding by 5.2% in 2021 and by 3.3% in 2022. This corresponds to a revision compared to the previous ECB staff projections of last March of minus 9.5 percentage points of GDP for this year and to an upwards of 3.9 percentage points for 21 and plus 1.9 in 2022. According to the June staff macroeconomic projections, annual harmonized indices of consumer prices in the baseline scenario should correspond to 0.3% in 2020, 0.8% in 21, and 1.3% in 22. In March 2020, staff macroeconomic projections of HICP inflation was expected to be 0.8 percentage points higher in this year and 0.6 percentage points higher in 21 and 0.3 percentage points higher in 22. Based on this scenario, on June the 4th, the Governing Council further expanded and prolonged the ECB monetary measures with the aim to, I quote, contribute to maintaining favorable financing conditions for all sectors and jurisdictions in order to underpin the recovery of the economy from the coronavirus fallout. The most relevant measures probably consist of the increase by 600 billion euros of the Pandemic European Purchase Programme, the PEP, whose envelope already amounted to 750 billion, and the extension of the same programme until the end of June 2021. Before leaving President Lagarde to present in further details the decisions that have been taken by the last Governing Council, I would just like to highlight some lessons that we can learn from the current crisis. First one, the importance of the euro and of the single market, which are not only the core of European integration, but also the key element of any economic perspective for the European Union in global competitiveness. Second, the crucial role played by European and national public authorities in guaranteeing confidence between different countries, financial institutions, and operators during the pandemic. And third, the need for an appropriate mix of monetary and fiscal policy at the EU level to support the economy along a sustainable growth path during these times of geopolitical turbulence and low inflation rates. The usual preparatory work with our panel of experts focused this time the following topics selected by the ECON coordinators: the ECB's mandate, perspectives on general economic policies, and the international role of the euro. On this second item, the ECON committee actually has decided to issue an own initiative report separate from our usual annual report on the ECB activities. I believe that all this parliamentary work will continue to develop in a constructive spirit of cooperation between the Parliament and the ECB. This committee has always taken very seriously its responsibility in scrutinizing the ECB decisions in the area of monetary policy through our monetary dialogue, in line with the legal and institutional framework laid down in the treaties. I believe that we will continue to exercise our role with the same commitment, thanks also to the excellent and well-established cooperation between the European Parliament and the ECB. So, we have many issues to discuss today, but before giving the floor to President Lagarde, let me just remind the procedure that will be applied for this exchange of views. First, we will have introductory remarks by President Lagarde of about 15 minutes, and then we will have 5-minute questions and answer slots, 2 minutes maximum for the question and 3 minutes maximum for the answer. In the first round of questions, each political group will have 1 slot, and then thereafter we will apply the DONT system, which determines the order of questions by political groups. And if time allows, we will have some catch-the-eye questions. So taking due account of the weightings of each of the political group. Please, I really ask you to strictly respect the time given to you. It's very challenging to hold these kind of hearings and dialogues on remotely with the platform, and so please try to keep the time. So I will now open the debate. President Lagarde, you have the floor for 15 minutes.
Thank you very much, Madam Chair, and good afternoon to all of you honourable members of the Economic and Monetary Affairs Committee, ladies and gentlemen. I very much appreciate the opportunity to speak to you today at my quarterly hearing before this committee as ECB President, although I have to say that it feels very different from the last time we were together in presence of each other's. Nonetheless, as Charles Dickens would have said in Great Expectations, it was the best of time, it was the worst of time. In both best and worst of time, I highly value those moments when we can exchange views, have a dialogue, where I can address the questions that you have, and when I can hear the concerns that are yours. Since the last monetary dialogue in early February, Europe has entered a crisis of unprecedented scale. And I'm tempted to borrow the characterization that you have given to this crisis, Madam Chair. A crisis that, as you said, is unprecedented in peacetime. A crisis that is of nobody's fault, that is of no one's making in multiple ways, and a crisis that is affecting everybody, which is why we call it a symmetric crisis or a symmetric shock. Overcoming the crisis and mastering the recovery has required already extraordinary action at both national and EU levels. So in my remarks today, I will provide an overview of the economic outlook for the euro area, and I will also explain the ECB monetary policy decisions in response to the coronavirus crisis that we are facing. And then I would like to share some considerations on the policies needed to support the European recovery. Because this was the topic that you had picked a few weeks ago, I will also say a few words about the international role of the euro, although on that particular topic, you will have more insight, better and deeper analysis very shortly, because we will be publishing a report in the course of the next few days. It will be on the ECB website this week. So let me start with the current economic outlook and ECB recent decisions. The COVID-19 pandemic and measures to contain the spread of the virus have caused an unprecedented contraction of economic activity in the euro area. Let me start with what we are fairly confident about. Contraction of GDP in the first quarter of this year is 3.8%. Our new staff projections see it shrinking by 13% in the second quarter. But despite bouncing back later in the year and recovering some of its lost ground, the euro area real GDP is now projected, as you indicated, Chair, to fall by 8.7% over the entire 2020 before it starts recovering in 2021, with growth projected at 5.2%, and in 2022 at growth projected at 3.3%. Two remarks in that respect. We are probably the first large central bank to actually offer a projection. Most of our colleagues so far and many other institutions have actually used scenarios. This one is our projection, and it is the middle, slightly revised actually, middle scenario of the three scenarios that we had used in the last comments that we made about the economic outlook. We have still kept our two other scenarios, the mild one, quite unlikely, and the severe one, hopefully unlikely, but we have those two as well, and they've been published on Thursday last week. The sharp drop in economic activity that I have just mentioned, our forecast minus 8.7, plus 5.2, plus 3.3 over the course of 2021-22, also clearly have a bearing on the euro area inflation. Year on year, HICP inflation declined in April by to 0.3% and 0.1% in May, mainly due to falling oil prices. Looking ahead, the inflation outlook has been revised downwards substantially over the entire projection horizon. In the baseline scenario, inflation is projected to average 0.3% in 2020, before rising slightly to 0.8% in 2021, and further to 1.3% in 2022. The monetary policy measures taken by the ECB in March were critical in removing the tail risk of the COVID-19 pandemic and the ensuing drop in economic activity, morphing into what could have been a financial crisis. Since March, that risk has receded materially. However, financial conditions are still tighter today than at the outset of the COVID-19 pandemic. Taken together, two main factors. One, the deteriorating inflation outlook, threatening our medium-term price stability objective, and the unwarranted tightening of financial condition, second. The Governing Council last Thursday decided to increase the amount of the Pandemic Emergency Purchase Programme that many of you know as PEP. It has decided to increase by an amount of 600 billion euros to a total of 1,350 billion euros. That was decision number one, increase the PEP. Decision number two, to extend the net purchase horizon until at least the end of June 2021. And number three, to reinvest maturing assets acquired under the programme until at least the end of 2022. A three-pronged approach was then taken. Two specific aspects of the PEP made this programme the most appropriate tool in our arsenal to step up the monetary policy impulse. First aspect, in line with the execution of the programme over the past 2 months or so, the inbuilt flexibility of the PEP purchases can still play a key role in market stabilization, safeguarding the smooth transmission of monetary policy across asset classes and among jurisdictions. Second, asset purchases are particularly effective in easing the monetary policy stance in the current crisis environment because they can directly affect market funding conditions for companies and the price of credit for households and for small and medium-sized businesses. The increase in the envelope of PEP adds, of course, to the comprehensive package of monetary policy measures that we have implemented in response to the COVID-19 crisis. I might say a few words about those because we have not seen each other. We haven't really talked to each other since that. So in addition to substantially scaling up our asset purchases, we are providing liquidity at much more favorable conditions through our credit operations. The targeted long-term refinancing operations, also called, for some of you who are familiar with anagrams, TLTRO3, is the most prominent and effective among them, as it allows to support bank lending to those affected most by the spread of the coronavirus, in particular, small and medium-sized enterprises. In addition to that, we have significantly eased collateral requirements to make sure that banks can make full use of our credit operations and help sustain the flow of credit. All these measures will support liquidity and funding conditions in the economy and help sustain the flow of credit to households and to firms, including the very small firms. Maintaining favorable financing conditions for all sectors and jurisdictions will underpin the recovery of the economy from the coronavirus fallout. Our crisis measures are temporary, targeted, and proportionate. Their temporary nature is reflected, for example, in the net purchase horizon of the PEP, which is expected, as I have said, to run at least until the end of June 2021, and in any case until the Governing Council judges that the corona crisis phase is over. So they are temporary, but they are also targeted to the specific shock and contingency at hand, aimed at repairing the economic hardships wrought by the pandemic. And they are proportionate to the severe risks to our mandate that we are facing. The measures we have taken in response to the COVID-19 crisis underscore the Governing Council's continued determination and readiness to adjust all its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner. We do remain fully committed to our mandate. That is beyond question. So, allow me at this point to spend a few words on this, as it is the other topic you have chosen for today's hearing. The ECB received a primary objective from the drafters of the treaty, that of maintaining price stability. Without prejudice to this priority, the ECB shall support the general economic policies of the European Union. Now, indeed, price stability, the primary mandate, goes hand in hand with a healthy economy and a sound financial system. Now, this is reflected in the measures taken by the ECB in recent years in pursuit of price stability. These measures have not only prevented the economy from entering depressed and deflationary conditions, but they've also contributed to supporting employment and to reducing financial stability risks. In this context, the ECB has to, of course, constantly evaluate whether its policy measures achieve their intended purpose. This assessment also includes analyzing potential side effects of the measures considered and determining whether alternative instruments might be more efficient in attaining the objectives. In my first hearing before the committee, before I was actually nominated, that was, if I recall, in September 2019, in another world, in a way, I did refer to this assessment that people sometimes refer to proportionality assessment. I did refer to cost-benefit analysis. That's what we do. More generally, the ECB continuously monitors the proportionality of all its instruments. Such assessments are conducted regularly, as reflected in the monetary policy accounts, as reflected in multiple speeches, and not least, because this is critically important, in the dialogue and in the exchanges that we have with European Parliament, as we have today. The ECB Strategy review, which I have also mentioned in that first hearing and which I have discussed in subsequent hearings actually, will also play an important part in these ongoing efforts. For instance, consider our decision to expand the volume of the PEP. On the basis of solid analysis, we determined that asset purchases are a particularly effective tool in the current environment. Given the still fragile state of transmission, they are also the more efficient than alternative instruments, as they have a more direct impact on the borrowing conditions faced by households and firms. Given the continued disruptions caused by the pandemic, the net effects to be gained from the PEP expansion are overwhelmingly positive. The additional asset purchases will contribute to easing credit conditions to the private sector and thus support viable businesses in continuing to operate and in retaining as many workers as possible. This will help to preserve jobs, which is the most important factor determining the income and financial security of individuals and families in the euro area. Our measures play a key role in supporting credit intermediation through banks, not least since the business prospects of the banking system depends first and foremost on the macroeconomic outlook. Finally, our decisions will make sure that higher borrowing needs by fiscal authorities associated with the necessary fiscal response to the crisis will not translate into materially higher interest rate for the private sector. Overall, the decision to expand the PEP will prove to have been essential in avoiding an even deeper recession and in quickening our pathway to normalization. Our measures to combat the crisis also build on instruments already in place that continue to provide significant monetary policy support. Our asset purchases under the Asset Purchase Programme, our very low key interest rates, and our forward guidance that firmly connects our interest rate policy and our asset purchases to the outlook for price stability. Allow me to conclude, Madam Chair, just a few words about the priorities for the recovery. I believe that the ECB measures will continue to be crucial in supporting the return of inflation towards our medium-term inflation aim after the worst of the crisis has passed and the euro area economy begins its journey to economic recovery. Faced with that extraordinary shock, we need extraordinary measures. The EU budget can play a key role in mobilizing the necessary resources and putting them to productive use. To do so, it will have to be ambitious, not just in size, but also in its priorities and effective implementation. The European Commission's proposal for a revised multi-annual financial framework and the next generation EU are decisive in this regard. And we should not forget that the largest supranational issuance in euro ever announced that is associated with the proposal could also have a positive impact on the international role of the euro. It will be important to adopt that package quickly. Setting a clear timeline will give more certainty and more confidence to citizens, to businesses, to financial markets. Any delay risks generating negative spillovers and driving up the costs, and hence the financing needs of this crisis. European spending will be most effective if its focus is on projects that add real value from a European perspective. The primary common interest is to reduce the fragmentation stemming from the present crisis and divergence in the longer run. Thanks to the single market, we are each other's most important trading partners and customers. This was true before the crisis and will especially hold true in a global environment characterized by weak trade and demand. But for the single market to work as an engine of convergence, European companies should compete on similar terms. For our joint benefit, European spending should aim to re-establish a level playing field and support those most affected by the crisis. We also have a common interest in generating the conditions for long-term sustainable growth and protecting the welfare of European citizens. The crisis can be an opportunity to modernize our economies to make them fit for the future. The transition towards a greener economy is a crucial part of this. We have the opportunity to step up the EU's efforts to achieve its sustainability objectives by including climate change and sustainability consideration in the financial response to the COVID-19 pandemic. Sustainable finance will be key to the transition to a carbon-neutral economy. Today, we published our reply to the Commission's public consultation and reaffirmed our readiness, in line with our mandate, to support the efforts of governments, public institutions, and the private sector. Moreover, our forthcoming report on the international role of the euro finds that the euro was actually the main currency of denomination for the issuance of green bonds in 2019. Another key dimension is the digital transformation. And here the recent lockdowns have accelerated the adoption of digital technologies on a broader basis. Now is the time to expedite the digital transformation on a more permanent basis and bring the EU to the frontier of the digital economy. If combined with appropriate reforms at the national levels, these measures will strengthen economic resilience and boost our economies in areas with high cross-border spillovers. So let me conclude briefly. Our common response to this crisis, if used to effectively direct investment towards strategic priority areas, can be a catalyst for realizing Europe's longer-term vision. Ensuring a successful recovery will require all EU institutions to do their part. I very much welcome the European Parliament's call for an ambitious European response. I count on this House and this committee to design a strong and effective multi-annual financial framework. At the same time, you can rest assured that the ECB will, within its mandate, continue to support the recovery with all appropriate measures. And I now, Madam Chair, stand ready to answer your questions and those of your colleagues. Thank you.